Hello and welcome. It is the 23rd day of February 2019. My name is Derek and welcome to the Money Charts channel. All bets trades and of which they like within each his own risk and their own reward. And I haven't said this for a while and I should say it more often. For myself, risk reward management is always job numero uno. Or number one. That's en français. But je ne parle pas français. Je ne parle pas français. No, I made sure I learned that before I went to Quebec City back in 1989. Oh, was that kind of needed. Throwing that aside, we're going to start off with DGB, very few candles, and the weekly term time frame. For we can at least see that July of last year it was above the 18 and has been falling ever since. It has remained in a bear market, thus staying below such this 18 average, barely having any time within it. Well, it's hit the 18 highs. Let's take a look at history with this coin and what has happened every other previous time this has happened, when it was in a bear market and it hit the 18 highs. Let's scroll back. Some of these periods are going to look interesting. I mean, big fat 18 average in here, but we're seeing uptrend. Here's one right now. There's a downtrend we can see here, and then on December it comes up to the 18 highs, and well, this was at about 241. It then proceeded to go north of 800. What about before that? Well, in here, this was just a wild move. I can see this was at 116 going to 2500. Oh, okay, that's interesting. And we already know for where it is now, it's like about 300 or something. Let's just see where this came from, because it came to the 18 average of highs here. It did go down a bit in this one, but it didn't go down much. The next time, of course, it went to the 18 highs it went through. But what preceded it? It was, see, this doesn't count. This was it was an uptrend before, but this does, because it was declining. So this was the first test of it here. So the first time, I guess you could say it failed. And then we have, like I say, these are the wild moves thereafter that. But even before this started, we can see that, well, this was in a downtrend here. It hit the 18 average of highs at this 32 mark, and you had two of them. I mean, this is why you have the insane orders. Maybe these days are gone and this is a 2015, 2016 kind of thing. But when you look at the profitability you would have if you use the type of trading strategies that I talk about, where you just have the orders in. And even if you get nowhere near this top, you sell it, say, like 89 or even 79, and it comes down to 48. Oh, just buy it back and put new orders in. And well, obviously the next day was how it was. And if you had the real insane orders, then you can see in here, oh baby, you could have just fooled around and been like, this is what I'm gonna do. The price that you bought back at 48, so you're like, okay, this is what I'm gonna do. I'm gonna whatever you have, I'm gonna put in 3 sell orders. I'm gonna put one in for about 74, one in for below this high at, say, maybe 170, and then one in for like 1,000 or something. And of course if you did like 990, like 975, and you're like, oh my goodness, look what just happened there. Maybe you sold, well, so whatever amount you sold, you can buy like 6 times more or something like that for the exact same price. Or maybe you buy 2 or 3 times more, and then you profit the rest, go into a different coin for free and stuff like that, because you had the orders in. But regardless, again, as it ended the downtrend, these wild moves that can potentially happen, and that's really where I'm going on this, is totally in play. Okay, so let's now take a look at DGB on some shorter term time frames, as we started it off within the weekly term. On the daily chart, there's a spot where you have the downtrend, bands flattening out, and now establishing a level of resistance. But we can see amongst in here, it got above the 18 average of highs after it came from the lows, came back to the lows again on the 20th of February, got above it again the next day, had an amazing hold day, yesterday's session, which actually is today, that being Saturday, breaking out above this resistance. It broke out from 262, it broke out of 269. It's already managed to barely pierce above 300. It's now at 293. So this day is just from 7 p.m. Eastern on. It's 8:27 as I'm doing this on the New York City time frame. So tremendous gains. Of course, yesterday against Bitcoin, 7 1/3% or 7 3/10 closer to, and 5% for today. So about 12%, and just a relatively quick period of time. Hourly time frame, we can see that the majority of this move has recently just happened. It happened from 7 o'clock to 8 o'clock. For me, if I were to say, what do you think I had filled? Sell orders or buy orders? It should be a no-brainer. The answer is sell orders. If you're curious about my trading strategy, probably new to this channel, I have the information, or I have some video series of several parts amongst my strategy. You can check that out. To me, it's a tremendous series, several hours long, but for the cost of it, which is nothing, it's the type of material I think that one would be really happy to go to a slide presentation, a 3-hour, 4-hour presentation. That would basically how I would compare it to. Okay, so hourly time frame, this thing is going up really good, but so is Bitcoin today as well. And we'll start within the single minute time frame. And as I've been stating, and this happened just before lunch, 11:54 a.m. Eastern time. Market was just hanging in there, doing all this kind of stuff in here, and up she went. Now, I did mention this morning, and even for the last couple of days, that this was looking pretty good, and I thought it was more likely to have a good leg higher next than a good leg lower, given how the technical analysis was, as it made the statement that it was going to go to 4,100. So it finished the statement that it made. And when we look at 4,100 on the shorter term time frame, after its top piercing above, and that's the possibilities. You could either pierce below, which it originally did at 12:47 New York City time, Toronto time, as well as Miami, Florida time. Always they have the same time zone, interestingly, not really. But previous high, or pierce below, then it pierces above. Congests within its first correction down at 1307, resists that line, falls down, resists it again, higher low, and amongst such we can see, although there's not many candles here, it leaves the 18 average right in here, and nice little great gain, and there's a constant support at this line. These numbers, I just draw them in by mathematics, and they just seem to work like this over and over and over again. So I'm just going to keep using it. They just do fantastic. And here's an attempt to break higher. Barely does, but it has continued to hold. Establishes a low in here on the short term, lower low, and then it matches this level of resistance in here. But since 7:39 p.m. Eastern time, short term, it's even breaking out of this. 18 starting to rise, and even just extremely short term, I like what I see in here, where you have this uptrend in here after it's been going sideways, and it's still going sideways on the midterm. And we'll take a look at that as we expand time frames. We'll go 5, 15, and so on. But there's your failed breakdown that I like to see. I like how it quickly comes back and does what we're seeing here within the 18. And oh, this thing looks raring to go to continue higher. And we're at a spot on the intermediate term time frame. We're supposed to stop going up, thus face resistance. And we have short term so far. So short term, breaking out above it is, well, we're not as overextended by any means. 5-minute time frame. As we can see in here within this line, beautiful support within this here. Just from this top, it has, well, since this fell through, it spent the entire duration from the breakdown at 1610 up until 1905, right in here. is when it gets above the 18 average of highs and it stays and holds above it. It barely tried to get above it here, but it didn't do much. In this case, it holds it for 4 periods, has 2 decent greens up to get above it. It stayed above it, just grinding its way higher, thus clearly breaking the short-term level of resistance, supporting it 2 periods prior, and now showing spots where it wants to leave this 18, so looking very productive. Viewing such on the 15-minute time frame, where's the market meeting up with it, so showing strength amongst the 18 average of highs is what this is doing amongst its sideways correction. On the single hour time frame, still well overextended, but having this short-term breather that when these markets go, we can see that if you have a move up like this, you correct in a manner like this, especially when you have the higher lows, you could draw an uptrend line that matches these last 6-7 periods. Then having a big green candle move like we've seen at 11 and 12 o'clock again is not a surprise. 4, we're supposed to resist here. If we don't do that, one of the things is fast move to next level, and I'm starting to think that that's more and more probable, because usually this is resistance. That was the more probable thing. It still might be. 4-hour chart. So after it makes it there, it pierces above, it closes this hour, or 4-hour period rather, amongst that level, and the 2 periods that have followed it since then is bullish. It's green candles up, it's higher lows. The last period was a higher high. There's still not quite at the halfway point for this one. It's amongst the highs of the period. It looks very probable that this period is going to have a higher high, or it's going to get above 4,100. Right, it already has. That was a low. It's going to get above 4,156, which was the previous high from the last period. That's what is kind of showing from here. So daily time frame, we're at an area where we're supposed to stop going up. You had this level of resistance here, which it did do just that. Then when you have a retest of it, no surprise, you break it out. So that's why we have this in here. The statement was made, yep, we're going to next key level, which is why I was not surprised today that it happened. I thought it was more likely it would have happened on a Monday, but hey, it did it today. So it's at an area it hasn't seen since January. It's at an area it's seen back in here. We're also at the highest close that we have been since the close here on, what was this close at? This was at 41.10. So the close on December the 1st was 41.42. So therefore, about a close to a 3-month highest close. But it's supposed to stop going up from here. Even on a bullish level, it's supposed to stop going up. I do point out, the more likely you test resistance, the more likely you take it out. It tested it here, good pullback. It tested it here, decent pullback. Tested it here, better pullback. Tested it here, we're testing it there because that's current tense right now. Let's see what we have. Now a pullback that comes to the 18, comes back to the, now the 3,700 is huge, must hold support. Even 3,600 really. 3,600 to me is must hold area. But until I see decent retracement, that's not what I'm going to be looking at. It still might be resistance in the sense maybe we go sideways amongst the band. Maybe it does come back to, though the next short-term support level is this the previous few days resistance. A little south of 4,000, 39 high change. That, to 39 mid, would be, and even 39 low. So the 3900s is another way of putting it, is the key area for short-term support. But if we're not finding resistance here, well, the next level is 48.48, and usually we'd pierce above it. So I'd think about $49 in high change as its next target level if it's able to continue to go higher, because we're supposed to resist now over the next 2-3 days. If I'm seeing how the short term is, where it just keeps going higher, but especially if I'm seeing it holding a couple of days or 20 to 30 hours, holding and staying above well, 41, and having resistance tests frequently or a decent amount of time above or 42 and a half. If I see some of that, I'm going to be extremely confident it's going higher. If I even just see the price at 44.18, although it is a retest of here, I will be extremely confident. And then 45.56, it's just a matter of time before it makes it at that stage to, of course, the 49. That's how I'm viewing the technical analysis amongst this particular chart. Let's take a look at this on the weekly now. And the message of the market here was obviously an amazing uptrend in 2017. Band flattening out, establishing support, had many periods coming back to the band, but took a long time to turn that into a bear market. If you complete stage 4, break established, in this case support, which it did do, you have what you normally expect, a normal leg lower, not too big, not too small, which is exactly what this is. But either way, if it's normal or too small, either way. But this was not a small breakdown. I mean, a small breakdown would have been like 46 change or something, or 45,000 to 45 would have been a small breakdown. But no, it was 31.50. So therefore, if you only can have one leg, and that's it, that's pretty much failed move territory, because you expect when you have a new trend, you're going to have either several legs to its direction or a monstrous one or two. So therefore, if you would have had your fast move and it just went to like, say, 1,300, I mean, that would have been like, okay, that's getting like maybe 30 periods done within 2 or something. But throwing those monstrous moves, which it didn't happen, aside, if this is the only move and this is the bottom area, well, that's, to me, I would classify as a failed breakdown type of stuff, especially if it manages to get to that, what would the next key level above 5,000 be, which is where it came from, which is pretty much in the low 6,000s. I'm going to 62 to 63. That would be, if it gets there quickly, especially if it does like the opposite, any type of a U-shaped formation, because we can see that the size of these 2 red candles were pretty good. The 2 follow through were decent. That if we have a decent, this is in the lines of a decent follow through up, especially if it only goes up to say 44ish or something. And the week I think it's over now. I mean, this will be the new week will come up, so this is just a decent move up comparable to these 2 down moves. So therefore, if on its route up to 6,000 low change, or in the 4,000s, 5,000s, if it has the polar opposite of this and you have a decent green candle like was back in here, the quick move up here, that's that U-shaped formation showing the failed breakdown move. So that's something to keep in mind. Now, as far as that spot on the daily, if we don't resist this 41 and we go to 5,000, 5,000 would be roughly where this, well, it's where this line is. That's noticeably above the 18, which means we will be working on stage number 2 for reversal of trend. For as long as this holds for a couple more weeks, stays above 36, which is why I said 36 was a key support, because this is where the 18 average of lows happens to be. That's stage 1, band flattening out. Make a move to the 18 average of highs is like an instant. Okay, it's pretty much flattened, and a decent break above it definitely is. But at that point, you're going on stage number 2, which is establishing a level of resistance, and you want to do so noticeably and decently above. So 44.97 doesn't cut it. That's just a small pierce above. 4,900 would cut it. That's what the statement would be if it makes it up towards that level. Okay. Let's move this on to the monthly. Because amongst this monthly chart here, this is your uptrend. Stage 1, band flattening out. Stage 2, establish support. That if we go to stage 3, which is where we're looking to be heading towards in the 18 average of lows, let me bring it up by pushing this here. We can see the numbers on the left. 5,176. So that would be a pierce below the 18 lows if it goes to like 49.66. And if it happens like in like 6 days, well, it's just automatically going to be noticeably lower, because last month it was 54.08 and it dropped down to 51.76. So therefore, with the front weighted number and the fact that this low is pretty low in here, I'm going to have to think that this would be like 46, I would guess like 4,711 or so, 47.74, the 18 average of lows that would be. So therefore you'd be making a move to that correctionary point. And if you don't attempt a stage 4, which is break established support in at 3,150, in this case 31.22, then I'm going to put a line in here. Let's just put that in now. That's the line. So therefore, let's assume within the next few days or in March, you get a combination of 1 to 2 periods that sees price action noticeably get above this 18 lows, but more importantly come back to where it congested before. That would be high 6,000s, and even for that matter mid 6,000s and 65 would count as well. Doing such, I can be, it's like we've shown it already before in the last chart, what the failed breakdown would look like. So you'd have this box shape formation. If it happens before the end of February, this will look like a nice sized green candle, or getting the more, maybe a polar opposite of what this one would be like. But even if it extends to the next one and does something like this, and it's a span of 2 periods, and it gets to this 18 highs, then you're now at that possibility where you're looking at the possible, keyword possible, failed, but you're seeing the early steps of what it needs to do. The failed breakdown is you break down a key support level, which is what this is. You have a noticeable leg lower. You don't spend too much time there. This is 2-3 periods. You get back to its correctionary mode, or its congestion area, which again is here, relatively quickly. That's why I say in the next few days for this period, or any time in the next period, which is all of March, then the alerts are there. Getting above the 18 in a spot like that, because usually if it's a failed breakdown and you get that box shape formation like might be transpiring here, then if it's a failed breakdown, you first get a quick move to where it came from, and usually thereafter that, maybe not as fast, but sometimes as fast or faster, you'll do the next step, which is a break above and then really go off. So that's why I'm saying within this period or the next, 1 or 2 periods to get back up to make this U-shaped formation, but maybe about 3 or 4 thereafter that. So therefore, if it manages within the spring to a northern solstice spring, which is where most of the people watching this are from, or northern hemisphere rather, then if you're seeing that within, well, I'll just say like April, May, June, July, if those 3-4 months just stay within a range of like 55 and like 8,500, and it just, this 18 average would be sideways, it'd be trading within it, I'd be saying, well, the possibilities are there, breaking out, yada yada, and then as if it would, it usually would happen there, and you start to see it in this area of 11.6, 12.3. The probability odds that you go up to here are pretty high. And I have to even continue on further in parlay speak, that the probability odds that you would have major resistance at this point would be weak or rare. Thus, you'd have no resistance to little resistance, and little resistance would be defined as small price moves, and thus that's that. Maybe it just does this, things of that nature there. And it wouldn't matter if it was going sideways for 2 or 4 periods or 40 periods. I mean, I doubt it would be 40, which would technically be 3+ years. But when you're seeing the failed breakdown possibility, price action in here, and then going above, I'd be looking at like 6, 7, 8, 9 periods getting above it, thus less than 1 year. And in finishing off, Let's do the polar opposite of Bitcoin, true US dollar slash with Bitcoin. Therefore, price action at 24,200 or 242 Satoshi for 1 US American penny. All right, so looking at this from this perspective, amazing move going from point A low to point B high. Along the way to point B high, you had this this move along the way that corrected for several days or periods amongst the 18. Then it broke above it, barely made a new high, which is what you do, which is fine in a bull market. Come back to this, successfully support again, match the previous high, and then break down below the support, which is no big deal because you have the point A low to the point B high. You're going to have to fill some of this empty space at some point, and it did. Then it comes up here to this level, and what didn't happen was it resisted lower because support was established at this 24 number. It spent time in here. This was the key date, January 6th. On this, it broke down below it, had some pause moves, but bullish signs, looking like the fake. So it gets above it, and then it's grinding its way up. And the volatility, weaker compared to this, which, given what this is on a short move, that was kind of iffy when you look at it, because you'd expect these better sized green and red moves along the way. It was one thing I would look at. But hey, that's fine to work your way, especially as time moves on within retracement modes. The volatility can diminish oftentimes. It's just it really diminished in here. And amongst such, you're looking to break out. Now, it was a little overextended here, which meant from point A low to point B high, it filled some of this empty space. Well, now we have the retracement from A and B, which we'll call the point maybe R low and the point S high, just two random letters. So now it's making a higher low to that. So going down below here, no problem. But you really need to hold and stay above about 26, and it didn't do it. And even here, oh, 25, well, close enough. I mean, holding above 26 and doing a few days like that, I mean, that's not the worst of things, but it carried its move down in here. So just like its resistance, or 41 supposed to be resistance on Bitcoin, 24 change is supposed to be support here, but it can be both bullish and bearish for the market to go up. As it's bearish, if it goes up, it meets up with this 18, it resists some of these previous support levels, aka, or another number known as, just 27 change would be like, oh, it's not uncommon to go up here, then go down after that. So we'll see how it plays out from this point. But as each day goes on, and I've said this for a while that I thought the bottom's pretty much near, but the more as I go on, the chances I'm thinking about changing the words from near to in. Thus, these highs or lows are in. For as this was doing what it was doing, I felt like, say back in here, I felt, well, maybe Bitcoin might go down a bit more, which means this going up. But I felt if Bitcoin breaks 3,000, 2,500, wherever it would bottom at, would be just that, a good chance at the bottom. That's when I say I think the highs or lows are near, that means in a case that there might be one more little move before it comes into place. But there's just so many spots in here where Bitcoin should have went down or this should have went up, and it never did that. So hopefully this will, I mean, market's going to do what it's going to do, but hopefully for myself, this thing just goes in here, gets some short squeezes and panics out of the shorts, and we see that failed breakdown on the longer term time frames as demonstrated by Bitcoin. But before we go on to that, I think I've said this before, I'm going to quickly talk about the short, long term, and intermediate term for BTC. And it really explains the battle clashes more than anything. So the trends for each, this one is that of off a bullish maneuver that has went sideways attempting to go lower, combined with a intermediate term, which is the weekly, and that's attempting to hold on to a newly established bear market and barely holding on at this point. And then the daily time frame, which would be better pointed out as short term. It went through level 4, reversal of trend, on February the 18th. So therefore, you have bull market short term fighting bear market intermediate term, working within long term, trying to work its way within its neutrality phase. So bulls, bears, and neutrality on all of the 3 main time frames, which means the big decision period for where we go from here amongst that long-term time frame. A failed breakdown, fast move higher, continue on here, because you can make a case that this was that similar thing, failed breakdown, fast move higher. It's either got to do that or revert the trend, and that decision is coming very soon. At least it looks as if that's the case. Thank you for tuning in, and have yourself a magnificent day. Bye-bye.